policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on
I'm
inflation.
Christopher Crystal, and these are comments about the Fed and the rate hikes. Jerome Powell has just come out and talked about the red hot job market and the need to cool the economy because it's growing too fast, and that's in the U.S. And so, of course, that's going to affect us here in Europe. How will we be impacted here in Sweden? Well, we're going to get the ECB is going to be raising rates to combat inflation. We already have very high food prices. A lot of this is tied to the energy cost. We're in the middle of winter, so fresh food is more expensive. And, we've already seen an increased cost, and a lot of this had to do with the energy hikes or energy prices. And so the Fed also made comments about the jobs market in the US. And I think what's really important to note is when you had the 517,000 in the US in January, that was the figure that was given out. Remember, there was at least 100,000 of that being attributed to joining the workforce from returning strikers. So companies that have been striking, like the railroads, the motor works, CNH, they returned to the workforce. So those numbers were counted as new jobs. So when we get Friday's figures, there's a strong possibility we may even see a revision downwards of the previous figures. Now, Friday, the expected figure is around 200. That's the survey. But we may see more in the increase, and that's because we had more people who were striking. So when you're looking at wage increases and you're looking at the economy and the job growth, remember we had unemployment at about 3.4, but this is, always remember, in the US, if you stop looking for work and it's longer than 6 months, and I think it's 6 months now instead of a year, then you're no longer considered part of the unemployment. You're not actively seeking, you're no longer part of the workforce. So the participation rate, which has gone down slightly, this level of participation is somewhat negative, and that's where you'll see possibly a revision downward. Now, one of the areas that you had strength in the January figures was in the hotel and restaurant. And this, I think, is a lot, return of COVID workers, and B, you have a lot of quiet quitting. So while you have a lot of the COVID workers, quote unquote, returning, some of them are not returning, but you have quiet quitters who are filling those spots. So we'll see how the job market looks on Friday. This will determine how the Fed is going to have to raise rates. And you may see something like 100 basis point as opposed to 75 or 50. And certainly looking at 6 in the US and possibly higher. And I think in Europe, we're looking at significant hikes. In Sweden, we may even see 6. I'm not the only one who's thinking that. You see the Nordea chief economist, she's saying that, Annika Vinst. And when you have a Fed who wants to be proactive and cut the inflation like Tadine does, which is what Volcker did back in the day with Nixon, we may see much higher rates than what people were expecting. So 6% could be a possibility here in Sweden as well. So with that, thank you very much. And those are our comments on the rate hikes. Good luck. You can always subscribe through the Substack, Financial Stockholm, and notes and description on the YouTube. So thank you for your time. Bye-bye.